Morning guys. Last night, bit of a nothing night really. The market seems to be just waiting for some major news today. Well, tonight we'll have the European monetary policy. I'm not expected to move rates, but there might be some forward guidance in the press conference as to when rate rises are going to happen. So there's a bit of a bid in the euro, nothing to really get excited about and buy into, but it didn't sell off as much as some of the others against the US dollar. But even the stock markets in US dollar sort of trod water a lot overnight as they wait for inflation numbers on Friday. So having a look at the charts here, we can see these are all the majors against the US dollar. We've got Aussie a little weaker, failing to push through the highs of the announcement. This is the RBA rate rise, and failing to make higher highs. Got a bit of a wedge happening there on the hourly. Might be an opportunity in that as we don't have any news coming out of Australia for the rest of the week, but we do out of the US, so there might be this sort of wedge happening here. A bit of a breakout of that might find an opportunity. Over in euro dollar, as I said, it just pretty much trod water. We go and look at the hourly, it's just flipping either side of the moving average, not really going anywhere much at all. Tried to break out here, failed to come back inside this little wedge, but yeah, as we come into the ECB, expect that sort of to tighten and not do much at all throughout the rest of today and until after the ECB. Pound, yeah, similarly not doing much at all, closing towards the lower end of the day. Whilst over the yen, it's certainly weakening. The Bank of Japan head, Mr. Kuroda, came out and said a weaker yen is desirable, but just not at the pace that it's been moving. So they don't mind a weaker yen, they just don't like how fast it's happening. And certainly accelerated at the start of this year and is happening again now. So that gave the selling of the yen a lot more momentum. CAD, difficult one with oil and a stronger oil and a stronger greenback. This is going to be a tricky one to trade. It's pretty much been stuck in this range for the best part of almost a year now. So I don't see that changing. Dollar Swiss, I'm not a huge fan of trading this pair. The Swiss is always being manipulated by their central banks. And I'm not a fan of trading the Kiwi because of the lack of liquidity, but we can see that the US dollar strength that we mentioned earlier in the week should dominate this pair as it rotates and looks again at this low. Dollar index would give us an idea of last night's session. We can see it was pretty much an inside bar, couldn't make a break out of previous day's range and closed pretty much in the middle of that bar, so not much action at all in the overnight or in the session so far, with only 40 minutes of it to go. Pretty quiet on the dollar index. So that's the currencies. As I said, there's Aussie dollar might be the only one worth looking at today if it breaks out of that little wedge that's happening. Euro dollar would probably stay out of it until after the ECB tonight, and yen is well overextended, but it's pretty hard to try and sell it at these levels, and I certainly wouldn't be trying to buy into it. So it's pretty difficult to jump on the bandwagon now and try and trade it in this direction, the dollar yen, but certainly trying to trade it back that way is rife with risk, so I'd look to avoid that. If you're not short the yen already, then I wouldn't be looking to trade it right now. Across the indices, a bit of a weaker session with a lack of direction or macro data, but the theme still remains that there's a recession coming, and buying stocks at these levels carries a lot of risk. So not many people are sort of looking to do that. There's a bit of consolidation here, and a breakout of that I would expect it to be going this direction. As the macroeconomic data, this is the S&P 500, the S&P, the broader index. I'd be looking for it to go this direction with the lack of sort of strong data coming out of the US. They're still looking at inflationary pressures, and as the Fed look to raise rates, again, another 250 basis points are priced in before September. So that's going to only add selling pressure to US stocks. Nasdaq didn't do much. Aussie 200 certainly a lot weaker. Off the back of the interest rate rises, the banks are getting hammered, which normally you'd expect banks to outperform in rising interest rate environment, but they've got monkey hammered maybe because of the amount of mortgages they have on their books. And mortgage stress is certainly a theme in Australia now as interest rates are rising. FTSE failing to get through this sort of resistance zone across here. Can't push through it. I would expect that to cycle back lower. And the DAX, similarly, technically it's sort of made a higher high here, and you've got a higher low. Would I be buying German stocks? No, not with what's happening in Europe and particularly the Ukraine. So that would be, to me, this is a false break at this stage. If we get a cycle like this and a new higher high, then okay, it would be in an uptrend, but I find that hard to see. The China 50 up against resistance, and again, they're coming out of lockdown now. Perhaps that might be a break. If it breaks through there and retests it, there might be a buying opportunity. Okay to be long Chinese stocks. They've certainly been hammered for the last year or so with no upswing when the rest of the world was having an upswing, and now that they're coming out of lockdown, there might be opportunities there. The Nikkei, what do you say about that? We're in a downtrend. This high, we made a higher high here. If it breaks that, then you'd have to say then this is the largest cycle and we're getting back into an uptrend, but by the looks of it, it's more likely to come back down to this sort of area of support here. Might look at that today as an opportunity. We've got a bit of a high test bar here against a resistance zone or a previous high. RSI is getting close to exhaustion. There might be a little counter trend trade there back towards this support level, which is, I would put it at around the 27 and the 27,500 level. I'll put a fib on that. Well, you don't have real support until we get down here. And if we go from when it was trading above the 50 EMA, we've got the 50 support. So yeah, I'll be looking for the Nikkei support level around this zone here. Trading it there. If it makes a new low, that might there might be a trade there. General advice only. I'm not suggesting you do it, but that's what I'll be looking at today. And the VIX, surprisingly, the fear indicator is showing no fear, even though stocks are certainly not going anywhere. It's surprising. What's the last date on that? Yeah. Interesting. Okay. Quickly into commodities. What I noted was that copper is holding on to those. Natural gas came off heavily, but we don't have live cattle on here. The cattle futures spiked higher overnight. Cattle. All these softs still at elevated levels or near all-time highs, particularly wheat. Don't have cattle futures there, but I do here. We can see cattle futures here, big spike up. West Texas, still climbing higher. Wheat futures, it's not all-time highs. All-time highs was back here over the Ukraine issue. Has peeled off a bit, but should be back down around the 800 level. This is still very expensive for wheat. Natural gas coming off, and iron ore also, which is good for Australia, is having a good week. So all in all, I think that potentially the Aussie and the Nikkei, Japanese stock market, maybe opportunities today. Alright guys, I'll leave that with you. You have a good day, trade safe, remember to risk manage, and I'll see you next time.